let's talk about your capex plans now. You had announced a 5,000 crore rupee capex investment starting 2022, running through 25. You've just announced setting up a new facility in the state of Odisha, which will mark the 10th Nestle plant in India. Given the engines of growth that you just spoke about, as well as demand visibility, what can we expect in terms of capex from here on?
Look, I think what we have spent now up till 2020, the company had spent about 7,000 to 8,000 crores from the time of its inception. So in about 60 odd years, we had spent about 7,000 to 8,000 crores. 2020 till the first half of 2023, we have already spent about 2,130 crores in capacity expansion. There are two kinds of capexes that we do, Shereen. One is capacity creation and the other is compliance related. So while compliance related also happens in terms of energy sources, in terms of safety compliances and other structural compliances, the majority of this has been capacity creation. Now, from the first half of 2023 till 2025, another 4,130 crores is being invested. So in all, over 6,000 crores of investment is coming on. About a third of this investment is in terms of the prepared dishes category. About a third of it is in chocolates and confectionery, and the rest of it is in nutrition and coffee. So penetration-led volume growth leading to a strong demand that we see not just from large metros and mega cities, but also from Bharat, is leading to the strong capacity creation and the confidence in India and the Make in India plan that we have as a company. All of this, as I mentioned to you before, Shereen, 98 to 99% of what I sell in India is made in India. And the Odisha plant, once again, will be resonant with the same theme. And again, resonant with the theme that we had in Sanand, which is that it will be a majority women-operated factory. It will be environmentally friendly. It will be digitally connected, and it will be the most savvy technological facility that we can have, and become a pride of place not just in the Nestle firmament, but also something that can be an example for other food processing companies, and in fact in the vicinity of the other states as well. So I'm looking at it with enormous hope and aspiration. And I think this strong plan is going to help us to cement some of this going forward.
Mr. Narayanan, let's talk about the inorganic opportunities for growth. You've taken a bite into the pet food business, courtesy and acquisition. You've also got into the D2C space now, courtesy Gerbers. What next as far as acquisitions are concerned? How much appetite do you have for M&A? What about Ching's?
Look, I think there is no, let me be very categoric with you, Shereen, there is no proposal at the moment in front of the board. So therefore, much as you might try to extract some answer from me, that is the plain and simple truth, that there is no proposal in front of the board. Inorganic opportunities continue to excite us. It continues to play in our space. You know that all that we have achieved of 17,000 odd crores last year and more this year has been on completely organic growth. We are hungry for it, and there is enormous support from the parent as well in making acquisitions in India. And let's watch this space.
No, when you say you're hungry for it, I know you said that there's nothing on the table as a formal proposal for the board to take up. But what are the categories that you would be most hungry to get a bigger bite of?
Look, any category. I think the three principles that we use for M&A is very clear. Number one is that it should be in the area of business that we operate in or we are familiar with. That's number one. Number two is, as a result of synergies, we should be able to bring something to the table. It's not just empty calories that we just add on a turnover and feel happy about it. Size alone doesn't matter. It's also the value that we bring to the table. And third, and very importantly, is also the cultural fit and the competitive fit of the target company with Nestle. So these are the three primary criteria. And the fourth one, of course, is so long as it doesn't dilute the overall value creation of the company significantly, or in fact is in some cases possibly even accretive to the company, that would be a good thing as well. But these are the 3 or 4 criteria that we use quite transparently, and this is the criteria that we are working with. So the fork and spoon is ready, the napkin is ready, the dish is in front of me, and do hope that that we make something happen. Huh?
Mr. Narayanan, we will leave it there. Always a pleasure. Appreciate you joining us here on CNBC-TV18 On The Record. Thanks very much for your time, and we wish you the very best luck for Nestle India going forward. That is it on this edition of On The Record. From all of us here for now, goodbye. Thanks for watching. We're back in a minute with more.
Listen to this, girl.